This is your LMAX Exchange technical update for Friday, October 13th, 2017. Euro dollar. So not much of the picture changing here for the euro, although the market has rebounded this week. The market is still at risk for deeper setbacks after it triggered a head and shoulders top several days back, which points to deeper setbacks towards the measured move extension at 115.55. So long as the market holds below 119.10, some internal resistance going back to early August on a daily close basis. So consider the possibility of a lower top somewhere below 119.10, or at least the market holding below 119.10 on a close basis in favor of that next major downside extension, which will be confirmed on a breakback below the recent lows, which come in at 16.70, about 116.70, just shy of some key support at 116.63 going back to August 17th, and then opening the door for that downside extension towards the head and shoulders top objective at 115.55 from several days back. Bear in mind that if the market does roll over here, there could be a bigger head and shoulders top that carves out here that ultimately projects deeper setbacks, even exposed down towards the 112 area. So again, 119.10 is the key level to watch above. If the market can hold below there, there's still a risk for deeper setbacks and for this correction to continue. If not, and we see a close above 119.10, it will suggest that the market is ready for a resumption of this uptrend in 2017 beyond the recent plus 2.5-year high at 120.93. Sterling dollar. So cable has seen a very nice bounce out from the 130 area of the past few sessions. The market could be at risk now for a resumption of gains back up towards the 2017 high. The structure has taken a turn here in 2017 on a longer term basis after the market put in a plus 30-year low in October of 2016 in the 118s, and the break above 127.75 did do a good job of solidifying the possibility for a longer term base. That being said, we could still see some short-term choppy price action, and there still is risk on a short-term basis that the market sees another downturn towards the 130 area and a little bit below, but ultimately any setbacks should be very well supported into the 130 area now in favor of a continuation of gains up towards that 2017 high and beyond, exposing a move back above this next psychological barrier at 140 further up. Dollar yen. So dollar yen is trading in the middle of a range right now, a recent range, but ultimately it's the bigger range here that's very important to keep an eye on, between 114 and 108 below, a range that has defined trade for much of this year. The market could be at risk for rolling over again back down towards the range lows, but we shouldn't rule out the possibility of one more jump up and towards the range resistance in the 114 area. But right now, again, not much to see here with the market trading down well below that, or a little bit below that 114 area range high, but showing the possibility of rolling over. So we have to wait and see here. Key levels to watch in dollar yen on a daily basis right now, on a shorter term basis, come in around the 111.50 area below and the recent high that we saw at 113.44 above. Euro Swiss. Euro Swiss has been consolidating over the past several weeks. The market still, though, is quite constructive this year after breaking out above 110 and 112, and so there are risks eventually for a break above 116.24, the 2017 high, and up towards that next major barrier at 120 further up. Any setbacks here should be very well supported now above 112, with only a breakback below there to compromise this constructive outlook. Aussie dollar. So Aussie is seeing a nice little bounce out from recent lows, but overall here, the market has been showing signs of topping out in 2017 off a plus 2-year high above 81. And so this latest bounce could find a lower top ahead of the next downside extension below 77.34, the recent low, and down towards the 75 area. Only a close back above 80 would put the pressure here back on the top side. Dollar CAD. So dollar CAD has seen a nice recovery out from its plus 2-year low down around the 120 area, and there could be still gains here with the market having seen an intense drop off in 2017 that does leave the possibility open on a medium term basis for additional corrective upside. Look for the possibility for a higher low now, ideally above 123, opening the door for the next upside extension, exposing a retest of the 127.80 August high that was seen on August 15th. Kiwi dollar. So Kiwi overall now is showing signs of topping out in 2017. And although we've seen a bit of a bounce in recent trade, look for this bounce to once again be well capped in favor of that next lower top, ideally here ahead of 73, in favor of the next downside extension below the recent lows and down towards a retest of the 2017 low, which comes in around 68.20. SPX 500. The S&P 500 continues to push to record highs at a relentless pace, and although the market is showing extended across multiple time frames, there have been no signs of any reversal thus far. Really, it's going to take a break back below 2487, the low from the 25th of September, to take the immediate pressure off the top side here. Gold. So gold, as we've talked about, has been very well supported on dips over the past several months, and although we've seen some intense dips over that time period, this latest dip once again very well supported off the 2017 high that came in around 1357, supported into this recent low into the 1260 area, and look for a higher low now here ahead of that next major upside extension beyond the 1357 2017 high, exposing a retest and break of the 2016 peak at 1375 further up.